In this video we will look at the Carnival PLC stock. We will take an in-depth look at the company and its businesses, advantages and disadvantages, and the dividend. I will then disclose my investment in the stock, including current losses, and give my opinion on whether I would continue to invest in the stock. I recommend you watch the video to the end. Your subscription motivates me a lot to keep creating quality content. Thank you very much for that. Carnival, one of the world's largest cruise companies, is a multinational British company that offers cruises all over the world. The company was founded in 1972. Under various brands, Carnival operates more than 100 cruise ships, including AIDA Cruises, Carnival Cruise Line, and Costa Cruises. To enhance the cruise experience of its passengers, Carnival continually embraces new technologies and innovations. I recently introduced personalized technology called Ocean Medallion allows passengers to conveniently manage their reservations for restaurants, spa treatments, and excursions via their smartphones. Additionally, the company is strengthening its sustainability efforts by equipping its fleet with greener fuels and taking steps to reduce the environmental impact of its cruises. In 2019, the company had revenues of about $20.8 billion and employed about 150,000 people worldwide. Carnival has faced a number of challenges in recent years, including serious incidents on some of its cruise ships, such as the COVID-19 outbreak in 2020, which resulted in significant financial losses and a damaged reputation for the company. Despite this, Carnival remains a major player in the cruise industry and is working to regain public trust and continue its business activities. Carnival has been listed on the London and New York stock exchanges since 1987 and is part of the FTSE 100 index. With a market capitalization of approximately $15 billion, Carnival's shares have been volatile in recent years due to various challenges, most notably the pandemic. The stock suffered a significant drop during the COVID-19 outbreak in 2020. The company responded by implementing new hygiene and safety protocols on its ships and restarting cruises on some of its brands to resume business. Dear viewer, give a like to this video and subscribe to the channel. This motivates me to record new useful videos. Thank you. What makes the case for buying the stock? With the vacation season just around the corner, there is a possibility that the company will perform well as demand for cruises increases, leading to a rise in the share price. The current share price has reached the lowest level in 20 years. Today is the cheapest opportunity to buy shares from the company. Potential disadvantages are: Carnival is a company in the cruise industry that is vulnerable to various factors such as environmental disasters, unforeseen incidents, changes in travel trends, and legislation. New pandemics or the reemergence of COVID may have a negative impact on the stock price. Because Carnival operates globally, the company is dependent on economic and political conditions in other countries. Due to recent challenges, the company has suffered greatly in recent years and will take some time to recover. Prior to 2020, the company paid quarterly dividends of 50 cents per share. However, since 2020, the company no longer pays dividends. Should you invest in the stock? As I promised at the beginning of the video, I'll show you a screenshot of my portfolio here. As you can see, my position is in a significant negative. Although Carnival stock has posted an 82% loss over the past 5 years and is down 45% over the past 12 months, some indicators are pointing to a possible recovery in the stock price. I assume that the company will generate higher than expected revenue during the upcoming vacation season, which will lead to a strong positive performance of the stock price. If the company were to resume paying dividends in the future the same level as before 2020, this would mean that investors would receive an annual yield of 20% on the current share price, which is extremely tempting in my view. In addition, the purchase price of the share has already been €70 in the past. If the price were to rise to at least €30, this would mean that an investment today could offer potential growth for 3. However, I would like to emphasize that this is my personal opinion and does not represent an investment recommendation. It is important to carefully consider whether one is willing to possibly lose the entire investment. For me personally, the current buy price of the stock is very interesting, and I will be repurchasing it. What do you say about the stock? Please write me in the comments if you would buy it, and if not, why. If you like the content, I would be happy if you subscribe to my channel. I hope to see you here again next time.